Hi, I'm Mike Hetman, and welcome to another edition of CMS Forex News. Today is Tuesday, November 13th, 2007. Poise returned to the markets today as the pound and the other high yielders recovered against the yen. First, let's take a look at the pound's moves. The pound yen was up 400 points, recovering about one-third of its losses from the last two sessions. Data today pointed to higher consumer inflation in the economy, which may put off any rate cuts by the Bank of England in the near future. In a look at the pound dollar, we see that the pound gained a strong 200 pips, recovering two-thirds of yesterday's losses, but only one-third of its recent 600-point slide. We shall see during the rest of the week if today's move is only a retracement of the downtrend, or if the pound will recover further as the week goes on. Turning back to the yen, we see that it stumbled against the rest of the majors as well, and gave up some of yesterday's gains to the commodity block of currencies. As of 3:30 p.m. Eastern Standard Time, the euro was up 275 pips, the dollar had gained 140 pips, and the Australian dollar led the way for the high yielders, increasing 330 pips from today's open. On the fundamental front, the UK released several reports. Yesterday night, the RICS House Price Survey showed that the number of real estate agents and surveyors saying prices declined outnumbered those reporting increases by 22%. It's the lowest reading since July 2005. Later overnight, the UK releases inflation data, which showed consumer prices increasing more than expected. Consumer prices rose 2.1% on the year and 0.5% on the month in October. The yearly data falls above the Bank of England's 2% target for annual inflation. Core CPI for the year did held steady at 1.5%, suggesting the upshot in inflation is due to volatile items such as energy and food. Retail prices came in at 4.2%, the highest in 4 months. Today's data and yesterday's PPI suggests that inflation is a concern for the UK economy, especially as a result of rising energy costs. In Germany, an index of institutional investors' sentiment showed a steep fall to negative 32.5. It's the lowest level since 1992. Current conditions, however, stayed close to last month's level. For the Eurozone as a whole, sentiment was down to negative 30, also lower than expectations. In the U.S., pending home sales in September beat forecasts and showed positive growth. This follows 2 months of steep declines for this indicator. In July, home sales fell by 10.7%, while in August they dropped 6.5%. The report is a bright sign in a sea of poor housing data recently. Now let's take a look at some upcoming releases. Overnight, we get UK's employment report, Germany's CPI, and the Eurozone's GDP. Tomorrow morning, the US will reveal its producer price index and retail sales data. And that's it for a recap of this Tuesday. Please join us again at cmsfx.com each day as we stay on top of the latest developments in the Forex market. For CMS Forex, I'm Mike Hetman, and happy trading.